Hello traders, Gary Wagner here for Trending Markets, approximately 10:15 on Thursday, 25th of July. First, let's take a look at the equities markets today. They have been pretty volatile, came well off of their lows, but are still closing down on the day. Dow Jones Industrial Average closing off about 75 points, but closing below 18,000 on the day. When we look at our daily chart, what we can see is that over the last couple of days, we have had this market moving lower after trading just above 18,000 to a high of roughly 18,159 on the day. S&P and NASDAQ both trading lower. S&P 500, we're looking at the E-mini. 2093 is currently where we're at, just closing up on the day off about 6 points. And finally, the NASDAQ off about 8 points at 4507. So the first market I do want to take a look at today is the equities markets, because even with this recent decline in the market, we talked about yesterday the potential that really what we're witnessing in this market is overall consolidation, and we're absolutely near the highs. So the question is, are we going to see a breakthrough through these highs, form some sort of a base there and move higher? Or are we going to, as we have in the most recent past, simply move up to the top of this market and then correct? We've had this happen on a number of occasions, literally throughout this year, and that's what we've talked about, that we've been in this tight range. Now, according to our Elliott Wave Count, and we are using GET on this, so it's an automated approach, what we are seeing is as follows. And really, if we take a look at this recent rally with our Wave 3, our corrective Wave 4, and this long Wave 5, what it really implies more than anything else at this fifth wave is we're going to enter some sort of a correction. And the way the system is looking at it is that we did get our A, we got our B, and we've concluded our C. That's really important, because if that's the case, we are going to have this market which came up, hit these highs, came back down, would necessitate, if we are in truly a wave 1 again, breaking through these most recent historical record highs and moving to higher ground, I should say. Now, on the other side of the coin, though, even though the system is labeling this as an ABC, when I look at our recent retracement, I would have estimated this retracement could go anywhere as low as at least that 23% retracement level, that fib-based number, and we certainly didn't get that, market going to only about 2060. So to me, that's the big caveat. And the caveat, of course, and what's hanging over everybody's head is the European Union, the debt crisis in Greece, and how that's going to unfold. Apparently, from what we've seen on this most recent rally as this market moved up, is that has been basically factored or discounted into the market. However, we've had this small correction over the last couple of days. We're getting close to the weekend, and we'll see how that resolves itself, or unfolds, I should say, over the weekend. But for right now, we do have the Standard & Poor's Industrial Average down below the highs that we recently had earlier this week, which were close to, but not necessarily above or even at these historical highs that we got, call it mid-May. And as far as the euro goes, as you can see, it's kind of jumping all around this morning, but it's jumping all around in essence at the unchanged area. So it's currently trading roughly at 112, just a little bit, as we said yesterday, above our sell point. Our stop is still sitting at 113.47. And the key on this is really what is going on over in the European Union and the talks. And from what we can gather at this point, the consensus seems to be that they'll find a way to keep them within the European Union, meaning Greece. And if they do, that would, of course, have, I believe, a very negative impact on the euro dollar. And so we'll have to see how this resolves itself. But we want to maintain our current short position and to also maintain our current stop. When we look at our daily chart, a couple of things kind of jump out at me. The first thing is, and we talked about this a little bit yesterday, we're still in this definitive cross on our moving average, MACD. The other thing that we've been looking at is this trend that we had, which is this upward channel drawn by our linear regression. And 3 days ago, we dropped below it. Look at the small size, body size, relative body size of the last couple of trading days. Very, very much a quiet market, but it is trading and closing underneath that lower level. And that, to me, is really telling me that we still have a pretty good opportunity in our current euro trade. And traders, just as we have really quiet activity in the euro, we also have pretty quiet activity in the dollar index. Now, realize that the dollar index is a basket, and it's comprised obviously of other currencies, so it's not just the euro. You can have the dollar go down and the euro go down at the same time. However, that's not usually the case. But what we are noticing is just in the same way as we have very, very quiet activity in the euro. Look at the last, this is a daily chart, look at the last 2 trading days within the dollar. Very, very quiet activity, really more than anything else, awaiting some sort of news. Now, interestingly enough, I've just gone ahead and added the linear regression, or our channel lines. Channel lines in the dollar are opposite the euro, obviously in this case, and just as they have been, when we just looked at the euro, it was trading just below that uptrend. You have the dollar trading just above this downtrend. So it seems as though the market is awaiting news rather than acting, and most importantly, it seems to have factored in the basic assumptions about what they think will happen and how that will affect the market. What I mean by that is if things resolve themselves in the way many anticipate, meaning that there is some sort of bailout package, that Greece remains within the European Union, that much of that, traders, has been factored into the market, and it would not so much be a non-event, but not a actionable event. We wouldn't see a major meltdown in either the dollar or the euro. My recommendation at this point is to maintain your current short position in the euro, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up and review. Bye-bye.